Welcome to The Explainer. Today, we are breaking down what is, without a doubt, a pivotal moment for the crypto market. And I mean it. This isn't just about another price jump. We are watching a fundamental shift happen in real time. So let's get right into it. So Bitcoin is consolidating above $111,000. But look, this is more than just a number on a chart. Think of it as a new foundation, a new floor being built on some incredibly powerful economic and regulatory tailwinds. And that's really the big question, isn't it? Why now? Why is everything happening all at once? Well, it's because we're seeing this rare consensus of forces all pushing the market in the same direction. It's coming from everywhere. So let's unpack the key pillars that are driving this historic opportunity. Okay, here's the game plan. We're going to look at the big picture economic and political shifts that are giving crypto a massive boost. Then we'll dive into the wave of institutional money that's finally hitting the beach, how all that energy is starting to create ripples in the altcoin market, and finally, what this new super volatile acceleration phase really means for you.
All right, let's dive into this. The first major force is coming from the broader economy. Honestly, this is the bedrock that this whole thing is built on.
The latest inflation report? Well, it was a total surprise. It showed that price pressures are cooling off way faster than anyone anticipated. And while that might sound like a dry economic update, for crypto, it's like a shot of pure adrenaline.
And just look at this chart for a second. That lower actual CPI bar might not look like much, but believe me, it is a huge, huge deal. It has a direct impact on what the central bank is going to do next, and that changes the game for everybody.
So here's the crucial point. It's a really simple chain reaction. You get lower inflation, which means the odds go way up that the Fed will cut interest rates. When rates get cut, money gets cheaper, and all that extra cash has to go somewhere. Historically, it pumps right into riskier, high-growth assets, and that includes crypto. This is the macro tailwind we have been waiting for.
Now, let's move on to the second pillar. And this is where it starts to get really interesting. We're talking about a fundamental change in the regulatory environment.
And this slide just perfectly illustrates the lightning-fast series of pro-crypto signals we're getting from the highest levels of the U.S. government. A presidential pardon for CZ, a potential crypto-savvy regulator, and a new SEC chair who wants clear rules. This is basically wiping away the ambiguity that has held back the major players for so long.
You see, this new regulatory clarity is exactly what the big institutions were waiting for, which brings us to our third and maybe most powerful pillar. The institutional stampede is finally here.
I mean, just read that. This is a massive development. One of the world's largest, most conservative banks is now treating Bitcoin and Ethereum as legitimate financial assets that you can borrow against. This is more than just an endorsement. It's a deep integration into the traditional financial system. It's the ultimate stamp of legitimacy.
And it's not just the banks, not by a long shot. According to Fidelity Digital Assets, the number of public companies holding Bitcoin in their treasuries has absolutely exploded, from just a handful to now over 75. This isn't just a trend anymore, it's a major shift in corporate thinking.
So with these three powerful forces all converging, all that energy is now starting to flow out from Bitcoin and into the wider crypto market. And this, my friends, is where things can get really wild.
So how do we see this happening? We watch something called Bitcoin Dominance. It's just a share of the total crypto market cap that's held by Bitcoin. Now, when this number starts to fall, it often signals the beginning of what we call an altcoin season because profits from Bitcoin start rotating into other projects.
And we're already seeing it happen. Capital is rotating into assets like XRP, which is all about bridging traditional finance. DeFi derivatives are reporting record trading volume. And yeah, even the super high-risk meme coins are surging. It's a classic sign that market-wide greed is making a comeback.
So, all of this brings us to the new reality. According to Fidelity, the market is now officially entering what's known as the acceleration phase. And you absolutely need to understand what this means.
This is the period where we could see the most explosive, just jaw-dropping growth of the entire cycle. But, and I can't say this enough, it comes with significantly higher risk. The price swings are going to be absolutely wild. Opportunity and extreme danger are now two sides of the very same coin. Let's just look at a quick risk dashboard.
Now, the Fear and Greed Index is surprisingly low. It's still in the fear zone. That actually suggests the market isn't euphoric yet, and there's still room to grow. We're seeing strong institutional confidence in Bitcoin ETFs, but institutional adoption of Ether is lagging a bit. And you see that last line? $31 billion in Bitcoin options are about to expire. That pretty much guarantees high volatility is coming. Managing your risk is now priority number one.
So what's the bottom line? You have to be strategic. It makes sense to focus on the assets that are directly benefiting from this new regulatory landscape. We're talking Bitcoin, ETH, XRP. But at the same time, you have got to be incredibly careful with leverage. In a market this volatile, it is the absolute fastest way to get liquidated.
So there it is. We have a perfect storm of macro, regulatory, and institutional forces all creating this incredible moment. The market has entered its final, most intense phase. The question is no longer if there's an opportunity. The question is how you're going to navigate it. What's your strategy going to be?